Good morning. It's Vijay here. Today is Tuesday, 4th February 2025. Welcome to yet another episode of Pre-Market Commentary. The title of today's topic is Prepare for the Bull. I think the bull has been battered, shattered. People no longer believe in the bull. They think it's all bullshit. So, therefore, people have abandoned the market. So much so that the FII's net positioning in the futures, Nifty futures, is close to 90%. As far as I know, this is a record short position ever. So we have seen positions of 80, 85, 88. Now we are sitting at around 90, 89.6. So this is clearly a record. Now, when the whole world is bearish, then who the hell is buying? And 27,800, which we saw recently, was not broken, even though we had extremely bad news yesterday. Incidentally, even the opening lows of yesterday were not broken on the Nifty and Bank Nifty. That is telling you something. That is telling us that the smart money is buying, bargain buying, and waiting for the right opportunity. Is today the beginning of the right opportunity? I'm talking of the beginning of the right opportunity. Time will tell, but I'm fairly confident that it looks like mostly it is the beginning of a new opportunity. So one should be preparing for the bull and no longer look at negativity which is there every. Now, many years ago, not many years ago, in June 2020, things were very bad. And that is when the old bull, the big bull, said in June 2020, the mother of all bull markets has started, and he was mocked because the markets had not gone up anywhere for the previous 2 years from 2018 onwards. Especially the mid cap, small cap were completely battered. There was no confidence, even though the markets had moved up from 7,500 to around 9,000 in June. But there was always this problem, this caution that any time the markets may crack. That is a similar situation prevailed then. The what shall I say? The earnings of companies were not that great, similar to now, and then interest rates have gone down. Then he said, of course, because globally the interest rates were down. Today, the 10-year yield is slowly showing the yields are coming down. So finally, the interest rates trajectory is clearly on the down. So just remember, history repeats itself sometimes, not always. It sometimes rhymes. I think this is the time for history to rhyme. We will talk about it where we were in June 2020. So, yesterday, what happened? The biggest problem for the global markets was about the Trump's tariffs. And I had mentioned yesterday also that if that is not there, then the budget should propel us into a significantly bullish phase for the next few months going into a year. So 2025 should be unlike 2024, where there is a lot of euphoria and there was a lot of excess in 2024. But in 2025, we should see much more steady movement and it will be more ups than downs. So Mexican president agreed to Trump's conditions, so it's been postponed by 1 month. Later, that is early this morning, you had Trudeau, that is Canada's prime minister, also agreeing to whatever Trump said. So again, that has been pushed forward by a month. Basically, push forward by a month will mean that it will get pushed forever. Same thing in case of Mexico. The reasoning being that once the Canadian and Mexican authorities realize that Trump is serious, then they will do everything and they have agreed for specific points on which they will be tested. So I think that Trump, what we call the art of the deal. So he wants to do, if he wants the foreign investor to do leader, not investor, foreign leader to do something. So he'll announce tariffs, and if people will say, "Oh, tariffs won't work; it will create inflation." But then the foreign leader caves in, and Trump gets what he wants. So this is what Trump's art of the deal is all about. He's written a book also on that, a bestseller. So this was expected by veterans like us, but then till it happens, one cannot say it has happened. So today morning, it has happened, and I think things will be much better going from here. Now, there is another important thing. The finance minister into the Times Network said they're working on rationalization of GST. They've already worked on a rationalization of direct taxes. The bill will be presented next week. There are a lot of people thinking that some googlies will be there, some bombs will be there, but I can tell you with confidence that very, very less likely. Incidentally, the drafting is more to remove redundant clauses and make life easier. And when they have started out with the budget, I can't believe that they will come with some googlies and some bombs in the direct tax bill. Incidentally, that bill has to go to a standing committee of the parliament. So even by chance there are some negatives that should get ironed out. And in the spirit of cooperation which the government is now talking of with industry and with the taxpayers, I think it will only be a good bill, and that may give further fillip to the markets. In the interim, we have the RBI policy, which should also this week, which should also give some positive jump to the financials. So all in all, the positive factors have aligned: extreme negativity, extremely positive policies, global backdrop very sanguine. So I do not see why we should not expect a 2025 bull market. So yesterday markets had closed. There's nothing much to talk about it. Mid caps underperformance was there. Market breadth was in favor of declines, but that was expected because of the fear of the Trump tariffs. So mid cap obviously underperformed. Sensex fell about 320 points. And then we had healthy January auto sales. People said auto sales have come down in December. That was expected because auto sales are down in December always because of the registration. See, you want to register it as a 2025 vehicle and not as a 2024 vehicle. So just a month later. So we have got better than last year's January sales, which is auguring well. February is again, and March. February and March are generally good months for the auto sales. So capex, people were scared that housing, HUDCO and all fell 9-10%, which is, I think, very wrong in the way of assessing the budget. In fact, for housing, Prime Minister Awas Yojana, 44% more has been given in this budget, but over the revised estimate. People are comparing with the budget estimates of last year. Of course, with budget estimates of last year, it is lower, but they are not spent last year. So if you take what has been spent based on the revised estimates, which will be spent in the next 2 months, 44% increase is there for PM Awas Yojana. So that should benefit stocks like HUDCO. Then you see there were stocks like Samvardhana and BLW Sona, because they are connected with Mexico. So those things also will start, I think, coming back to normalcy. So that is as far as the stocks are concerned. FIs continue to sell both in cash and futures. So they have sold about 4,000. I don't know who these guys are, why they are selling, but one thing is sure, that the marginal impact of their selling is coming down, because they are selling 4,000 crores, 5,000 crores, but the market is not hitting new lows for the last 10 days. That is something to watch. So heavy selling, high profile selling, and the prices don't move down, which means that the market is stronger than the prices shown. That is what we call the relative strength indices. Similarly, when the market is up and heavy buying, but the market prices don't go up, which means we are in a distribution phase. So today, two major Nifty companies, Titan and Asian Paints, and apart from that, Max Financial is an important company, Tata Power, Godrej Properties, Happiest Minds, Whirlpool, JK Tyre, and Torrent Power. These are the ones which are going to be the focus because of the results. So what happened in June of 2020 when Mr. Jhunjhunwala talked of mother of all bull markets? That time it was about 9,500. From there it went up to 23% at first stop, then it stopped, and then finally it went up to 55% by January 2021, and then it kept on going up after that. We do not know whether it will go to 55%, whether it will go to even 23%, but one can safely assume that the worst is over. If by chance, if we have a Jhunjhunwala kind of situation again, then we can see a 23 and 55. Let me not even talk of those numbers, because if you convert them into Nifty current numbers, people will laugh at us. But something tells me that things will be much better than even what the bulls indicate. Not something, it is basically data tells me that bulls are themselves not going to believe these numbers. It has happened in the past. It may not repeat, it may rhyme. Whatever it is, are we prepared for the fall bull markets, or at least are we prepared for a significant uptrend from here is what we have to assess. As usual, I continue to be bullish. I think the budget was extremely good. I have mentioned that in the last 35 years, which I have been in the market, there are three budgets which were really great. One was the 1991 budget, the reformist budget. The 1997 was a reformist budget by Chidambaram. The first one was 1999 by Manmohan Singh under Narasimha Rao, Congress government. 1997 budget was Chidambaram's budget under the UDF government. Deve Gowda was the prime minister then. And the third is Nirmala Sitharaman's 2025 budget. All three are in the top class. So we cannot number them as 1, 2, 3, but we can safely say they are the top three budgets I have seen based on the proposals. It has nothing to do with just 12 lakhs for the middle class. It's got ease of doing business. It's got focus. All of that have come into play in 2025 budget. And I think we should appreciate it. When we were criticizing the government, we should also be, what shall I say, large-hearted to appreciate. So I go, as usual, bullish. So whatever you do, I hope it is successful. Thank you for joining me.